Welcome back. Now, an increase in sales volumes from its paper business and an improved product mix in plastics boosted Impact's revenue from continuing operations. The packaging and recycling company said it experienced a challenging trading environment for most of the 2024 financial year. Group CEO Bruce Strong joins us now with greater insight. Thank you so much for your time, Bruce. Always quite a pleasing picture to see growth on the top line, but unfortunately that did not filter through to the bottom line. You talk about harsh trading conditions that form the backdrop of Impact's performance. What were the biggest pressure points here?
Well, I think one needs to just bear in mind that up until March last year, the end of March, there was quite intense load shedding up to stage 6 across the country. That really dented consumer and business confidence for that period. And once that had been resolved in April, where everybody was feeling a little bit more happy, then we were going into the elections, and people once again were a bit cautious going into the elections. You know, we had customers telling us to hold off with orders until after the elections because people were uncertain about what the outcome might be. After the election, there was a lot more optimism, but actually we only really saw any uptick in the economy towards the end of the third quarter when interest rates were cut for the first time in like 4 or 5 years, and inflation rates started coming down. So it was challenging in many respects, but fortunately in the last quarter we were able to increase our sales volumes by exporting more product from our containerboard mills. But that didn't offset the deterioration that we had seen for the balance of the year.
All right. Well, I mean, obviously in this environment, you often look at the margin picture. What factors are then flowing into your margins and really how you're managing that landscape?
So, well, we had a number of once-off costs in our numbers this year, which were unfortunate and also undermined our margins. So that's a factor to bear in mind. And our selling prices on average have come off from their highs of 2022, and we had a sort of a really big recovery and rebound in margins.
Yeah.
So we did expect some of that correction down. So that wasn't unexpected. But in the plastics business, we had a number of once-off costs, which did dent our earnings. Having said that, most of those were non-cash costs, so we are still very pleased to see our cash generation from operations up at 1.9 billion rand, which is only a fraction of our record ever. And we saw our net debt come down to 2.4 billion rand and gearing to 29%, which is the lowest in 4 years. And in addition to that, that also translated to our net asset value per share increasing to 35.76 rand, that's 6% up. In a tough trading environment. So, you know, while we battled on some parts of the business, we're happy that in other areas we're able to mitigate by generating good, strong cash flow.
All right. Well, I want to go specifically into the challenges and the production downtime that you are experiencing at your Springs paper mill. What's at the core of those challenges and what Impact is working on to soften that risk?
So that Springs paper mill is based in Ekurhuleni on the East Rand, and I must say Ekurhuleni's had a number of challenges with both water and electricity supply from the municipality. It's not only load shedding, but the load shedding is also a big factor. But it's also supply interruptions due to failed infrastructure and so on and so forth. So that's been a challenge. In 2023, we commissioned a 5.4 megawatt solar installation at Springs to try and mitigate some of the cost impacts of that of the electricity supply. And we are busy designing and engineering a water supply solution to at least give us several days of uninterrupted water in the event that the water infrastructure fails, as it will do, no doubt, if things carry on as they are now.
Yeah, and I would imagine that the costs of that are maybe continuing to kind of try and mitigate those infrastructure failures there?
Yes, so it will have quite a big capital cost, but fortunately we have been working on this for the last 8 or 9 years, you know. I think we were quite proactive in identifying where the key risks lay for our business from a service delivery point of view. And we've already installed 16 megawatts of solar across our business. It saved us over 40 million rand in costs last year. and helped us to run operations that might have otherwise been affected by load shedding.
Yeah.
And that our solar generated power was up 79% last year compared to the year before. So we have been busy with this operational resilience project for a number of years already, thankfully.
All right. Well, let's cross over to Mozambique, where you have less control of what is happening there. Of course, we do have the political unrest. How far have those disruptions in Mozambique seeped in through to your business, particularly the paper converting business, if I'm not mistaken?
Yeah. Well, we do have a factory in Mozambique, and they were shut for a number of months as a consequence of all the unrest. And in addition to that, we supply a number of our customers from the South African factories in Mozambique, most notably fruit producers, banana producers, and that supply was interrupted. So it cost us 20 million rand in direct costs and another 20 million rand in provisions last year. Fortunately, in the bigger scheme of our business, it's not a huge amount, but it's still concerning, and we are also concerned about our operations and our people in Mozambique, who have demonstrated tremendous resilience through this all.
Well, even with all the challenges, you mentioned earlier that you started to see some green shoots in the third quarter of the 2024 year, and I'm wondering if this could be a signal of a turning of the corner.
So, as you correctly point out, we did see an upturn at the end of 2024, and different to 2023, we actually had a peak season, although it wasn't in December, it was more like October, November. I'm afraid since then, it's not obvious that things are really are moving along swiftly.
Yeah.
At this time, the market seems quite subdued. But that should be seen in light of the fact that in our business, generally, the first quarter of the year is quite soft. So it's quite hard to say exactly where things are at the moment from a consumer point of view. Fortunately, our fruit growing customers, fruit exporters, they are seeing still quite strong and optimistic forecasts in their businesses, and we should benefit from that in this year.
All right. And just as we wrap up the conversation, Bruce, what do your capital allocation and maybe disposal and acquisition priorities look like for this current financial year?
So we've just come out of quite a big investment cycle, and we're just finishing off our biggest project, which is a 1.3 billion rand upgrade at our Mkhondo paper mill in Mpumalanga, and that's due to be finished during the course of this year. That will really enhance our product portfolio and also give us some export revenue, dollar-based revenue and growth in our business. So that's exciting. And beyond that, of course, we've got a number of other projects that we're looking at. We've still got some more power projects that we're considering, and a number of projects to enhance our entire portfolio for the benefit of our customers, and particularly those that are growing. So in the convenience shopping sector, we've done a lot already, and we'll continue to work there. We make the bags and the paper that's used for home deliveries, for example, and in the fruit sector, which still shows good prospects for the years ahead.
All right. Well, thank you so much for your time and giving us more detail on those numbers that came out from Mpact. Bruce, that was Bruce Strong, CEO of Mpact.